Today on Crypto Fox, we'll be talking about how Robinhood has revealed that a Dogecoin explosion is coming soon. If you haven't already, consider hitting that subscribe button and turning on post notifications. We also have a free Discord group where we share daily signals, and now you can also support us on Patreon. We have a special offer for our first 100 members, only $9.99 for our VIP Discord channels, where we share much more in-depth analysis and even one-on-one sessions. We also have a special discount offer on Binance. You'll get 5% off every trade you make on the platform if you sign up with our promo link in the description. Also in the description are links to get your hands on GSX, the gold-backed currency. This growth coin is designed to withstand market volatility, and it's backed by real gold and other mineral resources. Be sure to check out the links in the video description. Ever since it came into the limelight earlier this year, the popular meme-inspired cryptocurrency Dogecoin has continued to take the top spot in cryptocurrency trading activities on Robinhood. In its latest earnings report, the American financial services company pointed out a significant increase in its crypto revenue for the second quarter of 2021 compared to last year's second quarter. The firm said its digital asset-related figures rose from $5 million in the second quarter of 2020 to about $233 million in 2021. Robinhood noted that cryptocurrencies accounted for more than half of its revenue in the past quarter, with a whopping 62% coming from transactions related to Doge. A couple of weeks ago, the company said in its initial public offering prospectus that Dogecoin was responsible for about 34% of its crypto revenue in the first quarter of the year. Now the share for Doge has nearly doubled in the second quarter, considering the fact that the digital asset continues to receive public attention following several endorsements from billionaires like Elon Musk and Mark Cuban. About 52% of all the revenues that were based on transactions carried out on the platform came from crypto trades, and over 60% of its funded accounts traded digital assets in the second quarter of the year. Robinhood noted that a lot of new users on its platform placed their first trades in crypto rather than equities, suggesting a growing interest in such assets over conventional financial instruments. The company had over 22 million funded accounts at the end of the quarter, up from 18 million at the end of the past quarter. Vechain, CEO and co-founder of Robinhood, revealed in a statement that the company's crypto assets received a significant level of interest from female investors in the second quarter. We're encouraged by the number of people who are accessing the financial system for the first time through Robinhood. We're happy to expand access through products like commission-free crypto trading, which saw strong growth this quarter among female investors in particular, and IPO access, which gives customers an opportunity to invest in companies at their IPO price, he said. The surge in cryptocurrency trading was a result of the sharp drop in equity trading from its strong place up the first quarter of the year when meme stocks were dominating the market. In the absence of the GameStop pumps, Robinhood's revenue from equities trading fell from $133 million in the first quarter to $52 million in the second quarter. It was also a downtrend on a year-over-year basis when Robinhood did not have as many customers as it does today. After initially rising by 6.7% to $49.80, the company shares were trading at 3.3% lower in the trading hours following the release of the quarterly earnings. Robinhood posted a $502 million loss on revenue of $565 million for the quarter. Those numbers fell within the ranges that Robinhood had previously projected in its prospectus before going public on July 29th. Robinhood makes most of its money when users carry out transactions on the platform. It sends the trades of users to market makers who take a cut of the spread between the ask and bid prices and send a portion back to Robinhood. 80% of the company's total revenue was revenues that were based on transactions that were carried out on the platform. Premium subscription service and interest income made up the rest of the total revenue. As indicated by its earnings report, the California-based financial services company has enjoyed an immense increase in its revenue, largely because of its support for cryptocurrency trading. This growth has made its user base surge significantly as more investors continue to troop into the crypto space in search of alternative investment options. After several delays in its IPO filing, which had allegedly been due to intense scrutiny from financial regulators like the U.S. Securities and Exchange Commission, the company finally went public on Nasdaq earlier this month. In its earnings report, the company has, however, warned investors that it expects a less impressive revenue in the third quarter, considering that the trading boom is gradually going down. For the 3 months ended September 30th, 2021, we expect seasonal headwinds and lower trading activity across the industry to result in lower revenues and considerably fewer new funded accounts than in the previous quarter, the company said. Following the warning, Robinhood shares slumped by more than 11% in pre-market trading. Dogecoin hasn't been worth more than a penny until earlier this year. In late January, with a lot of chatter from Reddit users, the meme-based cryptocurrency rose to be among the top 10 cryptocurrencies by market cap. The Reddit users on Wall Street Bets, who launched GameStop stock into space, also sought to propel Dogecoin to the moon. Robinhood already allowed its users to buy Dogecoin and other cryptocurrencies, but trading started in the first part of the year. Over 9 million customers traded cryptocurrencies on the app in the first quarter of the year, up from 1.7 million in the fourth quarter of 2020. Many believe that the ongoing COVID-19 pandemic is one of the reasons for the increase in customers. With little outlets for spending, plus several stimulus checks, many Americans had more money at hand. With the growing online chatter about Dogecoin, the price surged, and trading the cryptocurrency became such a frenzy that it crashed trading on Robinhood in mid-April and again in early May. Soon after the crash in May, the coin reached a market capitalization of over $88 billion. However, Dogecoin and other cryptocurrencies have fallen significantly since their peak in May. Although Elon Musk referred to the coin as a hustle on SNL, he continues to be a strong supporter, even suggesting that Tesla might begin to accept it as a form of payment. Musk is not the only billionaire who's interested in cryptocurrency. The waters are filled with whales who own a large amount of Dogecoins and have the incentive to manipulate the price. A recent report shows that one person or entity owns about 28% of all the Dogecoin available, which translates to billions of dollars. As of early May, 100 people or entities owned about 67% of the Dogecoins out there. Elon Musk is just a visible whale, according to David Kirsch, an associate professor at the University of Maryland's Robert H. Smith School of Business. We know there are a lot of invisible whales in these markets who are actively manipulating price movements, which tells me that these are not yet mature financial markets, but are instead places where small people are going to be screwed. The price of Dogecoin is 31 cents at the time of recording, down by about 1.4% on the 24-hour period. It's also down compared to the highs it reached earlier this year when Dogecoin's price soared to about 73 cents. The surge had come after celebrities, including Elon Musk and Snoop Dogg, publicly supported the coin. It's almost impossible to predict whether Dogecoin's price will fall or rise this year, as cryptocurrencies are so volatile. The market is unpredictable as it's affected by several factors, including regulatory crackdowns and comments by high-profile individuals such as Elon Musk. Sarah Coles, a personal finance analyst at Hargreaves Lansdowne, recently said that forecasting what's going to happen next to meme coins is like predicting what is likely to set off the next tantrum in a room full of toddlers. Because it has no underlying value, it's not generally used for transactions and is a terrible store of value. The price is driven by highly unpredictable sentiment. So while people may point to patterns in the past and make guesses as to whether they will happen again, in reality it's impossible to say with any measure of certainty, as with those toddlers, any one of them could kick off at any time, she continued. However, this hasn't prevented crypto fans from forecasting what they think will happen to the price of the meme coin. Thank you for watching today's video. If you enjoyed it, make sure you subscribe if you haven't already, and turn on bell notifications. Don't forget to check out the links in our video description for our Patreon and Discord group, and make sure you check out the GSX competition for your chance to win big. Links are below, and if you have any questions, drop us a comment. And as always, thanks for watching, and we'll see you in the next video.
Hollywood Carson.